Hi everyone, welcome back to this week weekly market update. As usual, let's recap what happened on last Friday, and then let's take a look at what's coming up for this coming week as well. So for last week, we can see that the market, I mean, the market has been quite volatile and has been dropping for the past few days to past few weeks until last Friday. It actually closed green, right? So mainly might be due to earnings reports, mainly might be due to oversold, or mainly might be the price is actually at a support level. We'll look at the chart later, but we can see that the Dow gained more than 500 points in the best day to wrap up the wild week, correct? So the market has been up and down. Volatility is definitely there. It's just that when the volatility come back, right, it's good for trading as well, right? But of course, for long-term investors, sometimes you must be worried of your current portfolio. So do take note, we are actually going into the rate hike uh years. So as you can see from here, we can see that Fed is going to hike their interest rate 7 times in 2022, or once every meeting. All right, it's said by BOFA. So this is what we are going to expecting in the coming years, or perhaps in the March, whereby the first rate hike will be delivered. All right. So do take note if you are holding any shares, unless you are going to certain sector which is benefit from the rate hike, like the financial sector itself. So the market has been dropping, and then it rebounds back by be due to those kind of big earnings report like Apple. All right. Like we can see that what is the earnings report from last week itself. Last week you can see there is a lot of good earnings like Tesla, Microsoft, Apple, uh, Visa, Mastercard. All these companies actually have a good earnings more than their forecast. When you go see their individual chart, right, you can see that they actually spike up on last Friday closing. Of course, there is definitely some counter that is not doing well, it's not performing well, especially for the oil sector like Chevron, like Caterpillars. These few counters, right, is not doing well, and it's actually plunged on the day itself. Not just only that, even though for good counter like Intel, I think I saw Intel right just now. Uh, yeah, Intel is also above the forecast, but the market plunge. All right, so do watch out on the coming up week, because the coming up week, right, there is also big earnings reports from the tech side like Google, uh, like Facebook, like I think there's Amazon, right? Yeah, there's Amazon as well. And not only that, there's also AMD, which is like the related sector to Intel, right? We are seeing how AMD is going to perform on the coming week as well, because we can see that even though Intel is doing good enough, all right, but the market plunge. So we shall see. So for oil related sector, right, like Ezion Mobile, this kind of sector, right, because Chevron is not doing good, we shall see where is the chart later as well. All right, so we can see we have a recap what happened on last week. Next thing is that Big Friday rarely helped Nasdaq to avoid first 5 week losses. All right, so thanks to Apple, stellar earnings is doing good itself. So we shall see where is the chart later for Nasdaq. Hopefully, it's inside one of my watch list later. All right, so this is all for last week and the coming week. To take note, basically just a few things. Firstly, is on the earnings reports. Second is on the economy calendar, because we are heading to the first week of the month itself. So big news release data like crude oil inventory, jobless claim, non-farm payroll, unemployment rate. All right, as we know that this is always reporting on the last month, right? Basically, January is the revisit, so-called the revisit of the COVID cases spike up again. So it might definitely affect the payroll. All right, so do take note on itself. All right, because this is actually quite sensitive when we come into the March itself, as the figure is not doing good or the figure is doing great, right? It might give a reason for the Fed to decision on the hike, but I think that there's a high percentage is going to hike because the inflation is going higher and higher if you look at the past previous data. All right, let's take a look at on the chart basis. Let's take a look at Dow Jones first. So this is what I mentioned previously. So if let's say you are slightly longer perspective, right, where I'm looking at a bigger chart, right, where you shorted somewhere here, you hold all the way, this is where you write. All right, if you are doing intraday, you have to in out is very tiring. All right, so it's subjective to what kind of trader are you. All right, this is what I chart, And I remember I shouted in my Telegram group, if let's say you are over there, I mentioned that this is where you have to watch out. I think it's the few candlestick. I say that the price has been hovering around 34,000 to 33,000. You can go back to my Instagram group. The picture is over there. It's hovering around there. If it is not successfully break below 33,000, all right, or for 34,000, not successfully break. What do I mean by successfully break? You need a candlestick to form based on the day chart itself, not the week. The week is not considered a successfully break. All right, so the week show us a more decent support over here. Can you see that? A more decent support over here. All right, it does not have a candle followed by the next candle, something like that. All right, it doesn't show here. So it's a good support area over here for Dow Jones. So right now we are still above 34,000, 33,000, whereby under the Fibonacci of 61.8% is significant, and the market closed with a sharp green candlestick on last Friday itself. All right, so it basically just uncovered past few days. All right, making a good so-called a good candlestick signal. So for people who have managed to long, right, I hope you put some stop loss here. People should never just wait for a look at a lower time frame. Okay, just wait for a rebound to go in. All right, but do take note, the market is volatile. It's definitely volatile. Can you see the swing is that high? All right, the swing is that high. So if you want to long, right, make sure that your stop loss is not too near. Otherwise, you will get bite off easily. All right, you get bite off. But based on the candlestick itself, I kind of like believe it's somewhere around here. All right, that we are going to form another thing. All right, so this area cannot give way. Once it give way, we will see the next level. All right, which is the 50% Fibonacci level. All right, so my stand still remain the same. We are still on the bordering triangle, volatile week. So we will see how it goes. Okay, so this is my view for Dow Jones. View is upside. 34, 33,000 cannot give way. All right, next thing we shall look at is oil. So why we go into oil directly? Because we know there's a lot of news with the Russia, uh, maybe the war is going to start soon. Who will know? But right now, based on oil itself, right, this is what I mentioned last week. I say that we are actually at the peak. We are actually at the peak right now. So, all right, we are actually at the peak right now, and then it break up. Right now we are at a $90. Can you see that? It's very sensitive price area. So when we talk about war, missile, oil is definitely a must. Market recovery, oil is definitely a must. So right now the market actually went higher. So do not long lah. I mean, if you long at this point, right, it's like chasing unless you want to pay a breakout. Otherwise, I will just continue watch, because if you never long at where the price come back, right, retrace back, there's no point that you long at this high area, right? So right now, no action for me for oil unless you are more on the short-term traders. All right, so next thing we will be looking and recap on Hang Seng Index. Okay, I think Hang Seng might have some close. Market might be closed due to next week is Chinese New Year as well. 恭喜发财 to all the Chinese people here. So this is what I've been mentioning on Hang Seng Index. It's a good retrace back. So do take note, this area should not break. All right, should not break. If it break, right, it has been breaking since yearly support. All right, since yearly support. So this area 22,000 is very crucial, even though the market has not been performing well for the past few days. But do take note, this 22,000 cannot break. All right, once it break, then we will see more bearish on the Hang Seng Index itself. Okay, so this is what I'm looking at. Hang Seng, I'm still on the bullish unless the 22,000 break below. Okay, next thing we are looking into Tencent is still one of my favorite counter as well. Sorry, I just typed 700. Yeah. Okay, so this is one of my favorite counter as well. The price is still hovering. I mean, uh, with the volatility in the US side, right? It's just moving a few candle by a few candle is a good sign that the market don't have strength to plunge anymore. I'm still sticking to my view. It should not break the 4020 or 418 is the first support area. All right, otherwise I'm remain on bullish on Tencent as well. Next counter, we are looking into a couple of shares they already mentioned. All right, NIO. NIO is one of the counter I mentioned. Because we know that Tesla is not performing well, NIO have been saying all the way short, right? Seems like this is the first target, 22.45. We hit. All right, we hit. So there's a big descending triangle. Where will EV stands? Because we know that height is going to come indefinitely in play. Although most of the tech sector, take note if you are interested in tech sector, take note. Uh, when the rate hike, right? Because technology sector is usually the price will go up because of the promising revenue or going forward revenue or sales, right? But if let's say they have not delivered any good things, right, the debt will kill them first because of the interest rate hike. The debt will kill them first before the earning kick in. So if let's say you want to go into certain technology sector, right, please go into those good sector like Apple, right? Like Apple, which is a good earnings report. Can you see on Friday itself? All right, this kind of good sector, right, will actually help you in your going forward portfolio. Do not go into those sector whereby their earn they just forecast their earnings but have not earned the money yet. All right, so few counters that I want to bring in today is actually one is called Appf. I mean, you guys can go and find out. I think this counter is pretty interesting. He has been growing since 2016 all the way. Right now on the weekly chart, we are actually supported by the 200 days moving average. Alright, but on the fundamental side, you guys can go and find out a lot because right now, based on longer perspective, I am more kind of like a little bit bearish over here. If let's say this 200-day give way, right, then we will see more drop of discounted APPF. Right now it's being supported at this level. Alright, so if let's say market is bearish, I think this will also come down as well. This is one of the counter. So next counter I'm looking at right now is at the support side. So the wick candle is very important. I just put into my watch list and monitor and share with you guys as well. Next counter is ZAYD. It's also kind of like interesting. This is on the daily chart. So on the daily basis, right, we can see that even though the market performed well on last Friday, closed green, but this counter does not, all right, it does not perform that way as it do so. So right now, there's a close below previous all the way low since December. So I'm looking more on the downside for this counter itself. So looking on the weekly perspective, a longer time frame, right, I'm waiting for this moving average to cash back. All right, so I'm more downside on ZD on a short term basis. All right, on the short term basis, I'm looking at $91. So we shall see how it goes. There's the $10 more to go. All right, so next counter we are looking into NVDA. All right, NVIDIA right now, a lot of counter actually tech sector, especially where I do my research, right, is actually well supported by the 200-day moving average. All right, it's well supported by the 200-day moving average. That's why the price is being supported on last Friday because a lot of people wouldn't know that will it successfully break or not. So for this kind of instant, right, if the market is more on the bearish side, I know that you want to pick up on new good strong counter, right? This 200 points is at usually the first point for you to do some pickup. All right, then you do dollar averaging, right? But do save your war chest. Do not enter one shot. All right, do not enter one shot. Even though it's actually as a support, if you mention that if I don't enter right now, once you go out, how? But if let's say you go down, so there's always two sides, right? Right now, the market is kind of like downside sentiments, and with the rate hike, we shall see how many rate hike will it goes. Wait for March. I think it's just one more month. You will definitely won't hurt your portfolio. All right, so if right now we are at a 200 days moving average, if you want to enter, make sure your stop loss. Once it bleach, you will definitely go down. All right, so do take note for NVIDIA, especially earnings. Take note on the earnings as well. So next counter, we will be going into Discovery. I think it's Discovery. All right, Discovery. Right now, we can see the market has tried to come back on last Friday itself. But do take note, this is the anti-trend, because right now it's downtrend yet. All right, it's downtrend. Right now, if you want to find those shares, you find those uptrend. When it pull back, then you go up. Correct? Not? But right now it's downtrend. So when we are trading on anti-trend, right, do take note lah. When we are trading on the anti-trend, we need a very strict stop loss. Okay, so if you want to pick up on Discovery, there's good news, there's earnings in March, right? You want to pick it up, then you better have a strict stop loss. Otherwise, once it break, you will continue the downtrend. All right, so this is one of my counter and my current view perspective. I'm more on the upside right now. Okay, I'm more on the upside for Discovery. All right, next thing, which I mentioned, and I got burned once. It's actually ChargePoint. I did not throw it away. I mentioned my stop loss is 17. I got cut off. Right now it's $5 discount back to $12. Go fire on ChargePoint holding. Why? Because I think JP Morgan come into play. If I'm not wrong, should be JP Morgan. There's good report targeting the price is 20 or 24. I can't remember. All right, they upgrade these shares to buy rating. Okay, to buy rating. So ChargePoint is one of the counter I'm going to take a look, monitor it closely. If let's say they're able to hike up here, this is where somewhere my stop loss. All right, because this is what I draw previously, 1265. All right, so this is my view on ChargePoint. Okay, I didn't erase lah. I mean, I didn't erase what happened. There's no point, right? I just continue monitor because it seems like it finished the flat movement, if you realize. All right, so it seems like it finished a flat movement, so I'm looking at somewhere over here, double bottom or whichever, to spike it up again. All right, so that's my counter for ChargePoint. Do take note of certain counter, especially for the solar side. Why? Because let's take a look at the solar ETF. Solar ETF, all right. Solar ETF is not doing well. All right, it's not doing well. It's breached below this minor support area. Right now, we're actually at the 38.2%. At the 38.2%, you need to watch out because I think there is, I can't remember what of the counter is solar lah, but a lot of solar related company, right, is not performing well right now. They are all at the bottom because, like I say, the steps, right? So if let's say you are going into solar counter, right, do take note lah. It's not doing well at this moment. All right, so you break off the ETF. Next, one last thing today I'm going to share will be, all right, just now I mentioned, right, Intel. So let's take a look at what Intel, this is what happened. So this is what I draw previously lah. I mean, very, very long ago. All right, I think June 22nd. So it's very long ago. I say do not enter this zone. And then the market actually spike up. All right, they come back. It seems like Intel is trading sideways lah. We know that the global is shortage of chips. So when the earnings come out, right, don't expect that the market like AMD will be the only solo company that making earning money because they have the chips on hand. No, not that way. Right? They didn't really spike their price earnings on the chip itself. So shortage of chip means they are short of business as well, right? So it might actually impact their earnings for the coming week. But for a longer perspective, right, I think that there is chance for you to monitor closely. This is the weekly chart support since 2008 global financial crisis, right? 2009 recovery. Right now, if let's say the market is not doing well, I'm looking at a good support area again at this area. All right, so this do not enter. This is my first demand zone, right? Right now, I am looking for here. All right, I'm looking for here. Will it come to here? I will monitor closely. So right now, Intel is on my watch list back again. All right, so that's all for my this week weekly market update. Hopefully you guys enjoy. Stay safe. Remember to share and like my Facebook page. Thank you. 恭喜发财 to all the Chinese people. Goodbye.